Welcome back to Golden Rule Radio. It's been an exciting week here between last week and this week with the metals market. We've had gold bouncing around, silver the same way. Silver's right around $26.50. Gold's pushed down below $19.40. What do you guys want to talk about this week? Maybe the dollar? Dollar's seeing some support, bouncing off that long-term trend line that we've been talking about.
Yeah, it's almost like regardless of what the markets are doing, the charts still work. Who'd have thought?
As Miles loves to say, it doesn't matter when or how you get there, you're just going to get there. So tough to predict. This is a huge down day here today, Wednesday. Gold right now, as we sit here recording, is down $76. Silver's down $1.20. Platinum down $31. Palladium down $51. So what goes up must come down. But as you'll recall, the last 2 weeks we've had this alligator tooth type of image on the chart here where you've got to expect some volatility, some whipsaw up and down as gold and silver try to find their place and get a nice stable position here where we can form a base for the next climb.
Well, and all jokes aside about the charts, I think there are a couple fundamental things this fall we should pay attention to. There's some political event coming up later this year that may be, let's say, diverting some attention away from the markets. And then the second thing, of course, that I think just about everybody is facing is what the heck are we doing with our kids in 2 weeks? Are they going back to class? Are they not? And that varies state to state.
Well, and then you still have the pandemic, right? Obviously, what you're bringing up with the school issue, because of the pandemic, that's causing restrictions still economically. But there's good, positive economic news coming out, and that's going to be a fundamental. If that can continue, and we've even got some indexes hitting all-time highs, right, Robert? The S&P 500?
That's right. Yeah, the S&P's pushing to a nominal new high, and a lot of talk out there about how the stock market wants to push to a little bit of a nominal new high and then fall apart. So be watching for that because it really could put some pressure on possibly the dollar. If the S&P sells off, dollar may come up, may put some downward pressure on the metals. I think that might be a little bit what we're seeing right now.
Sure, and it does look like that dollar's pushing up today. I mean, the dollar is definitely in the short term climbing as we're seeing gold and silver both break down. I got to be honest, yesterday I was a little concerned gold was going to start its next rise until this morning happened, Wednesday morning happened.
Well, and remember first thing this morning, the dollar was down at 92.2. A lot of this reversal now to 93.04 on the dollar index has all occurred since, mid-morning. So you weren't wrong.
Right, and as the day progressed, obviously things have continued in this short-term trend. So this is good news for me as a gold bull, at least right now, gold bull, because the fact that we're still getting some healthy movement in the precious metals markets mean that we're still in the accumulation phase. We're not in that manic growth second phase,
Amen,
which pushes us up. And it was scary when silver went 100% following the March drop. And you think, okay, is this kicking off that next major leg? Don't hear me wrong. We agree with you out there in the comments. We know gold's going up too. Just be prepared that there could be, what's the word we like to use? Opportunity in the pricing here, both in gold and especially silver. Here, possibly over the next few weeks and months, we will find our bottom. As deep as it can get, the better it is. The more you pull that bowstring back, as I like to say, the farther you're going to shoot the arrow. So I'd love to see things calm down here in the precious metals like we're starting to see. Just be prepared that eventually we'll hit some of these fib levels. I'll throw on the chart here some of these pricing action levels you can see on the chart here. We're going to find firm footing on one of these points that we'll turn around at.
Yeah, as Robert likes to say, you're getting opportunities to back up the truck. Right, Robert?
This is the opportunity, I think. We said last week with looking at the metals charts, if you were to take the label off the metals charts and just look at it as a chart, this pullback is going to be the opportunity to be buying before the next leg up. So be prepared. The trend is clearly in place with the bull market with gold and silver. This is the opportunity on the pullback to be buying more. And you alluded to the election this year. Depending on who wins, a lot of people are asking what's going to happen, what's the market going to do related to the election. And I'd have to say the trend is fairly clear. I think it almost doesn't matter a lot on the direction of the trend with who gets elected because I think the trend is pretty clear. I think the bottom line really is the government is broke and they have two options. They're either going to inflate or default. And I think both of those are negative for the dollar. So whether one party or the other party gets elected, the government's still broke.
That's right. That's why it's important, in my opinion, to take advantage of these opportunities, because this is where we have, as a company, seen much bigger money, more pragmatic, well thought out positions being taken, IRAs especially, because people realize this isn't a short-term parabolic move that we're trying to catch, right? We did have some people try to catch that in 2011, much to the chagrin of that investor. That is not the reason to invest. And that's also why our astute core investors held on in 2011 despite the pullback, because those underlying currents hadn't really changed. The underlying fundamentals are such that the debt that you're referring to, with the government being broke, the reckless abandon with which they're continuing to spend, those are all over the long-term dollar week, even if the dollar doesn't change on the dollar index. Could it rally from here? Yeah, I still think it's going to come down into the 80s, and I'll hold to that, but you're still losing purchasing power regardless of what the dollar index is reflecting. So, Robert, you're exactly right. Those underlying long-term fundamentals have already been baked into this cake, and you've got multiple years ahead of you where the precious metals will do very, very well in a portfolio.
So speaking of which, let's talk about the last thing gold did really, really well, and that was break the all-time highs, push up into the 2000s. So if you do just take a look at the charts over the last couple weeks, we had that break up. We pushed up to 2000, 2080, I think we ended up topping out at. And you can see we built a floor in that high point, of which we broke down below here back on the 12th and fell all the way to about 1875. Intraday. We've compressed back up to that floor, up around just above 2000. I think we hit 2015 or so yesterday on Tuesday this week. And of course, we've turned right back around. It's broken through that secondary short-term kind of rising compression up, which isn't surprising. You compress into a level that takes out orders, and then it turns around and comes right back down today. So what that's telling me is we're definitely going back down sub 1900. By definitely, I mean very high probability. Obviously, anything's possible. But personally, I'd be shocked if we stop there. I think we may take one more step down, which is going to put us back down into, say, the mid-1800s at least for a second step down from there. And then we'll have to see how it turns around or continues and how quickly that happens. You know, the quicker that happens, the more likely it is to turn around. Reversals happen quickly. If it sort of trails off over the next 6 weeks, then who knows? Maybe it's December or January before we see the metals market turn back around and head bullish. And again, I said this a minute ago, this is a good thing. The longer this market takes to go up, the higher it's going to end up going.
I'll tell you what else happened last week that we didn't mention and nobody's really talking about, and that is the fact that they did raise margin requirements in the futures market. So I'm anxious to see if that's occurring here today and if it's compounding that, because as gold did cross that 2000 mark and silver had surpassed the $28 mark again, that's when they do garner a lot of attention, and you should expect the CME to raise margin requirements with the COMEX. And whether it's those introductory marginal rates or if it's in the futures market, doesn't matter. It still has a negative effect on the speculative aspect of the prices. So you should get a pullback when that happens. Does not change the overall trend line.
Yeah, that happened in 2011, but we're not at the same type of place that we were then.
No, definitely not.
Definitely not at the same place. So margin requirements raising, driving out a little bit of the speculation. Metals cool off. This is your opportunity.
Sure, this is more like 2006 or 2007 than it is 2011, just because the price is the same. The price is nominal. It doesn't matter. So taking a quick look at the silver chart, you're going to see a similar pattern as you did with gold, just more volatility. Silver actually exceeded the previous floor, so the percentages are just higher, but the same shape is panning out as far as the chart is concerned. So I'd be looking at silver to push down to around the $26 level, again, which was the low we hit here yesterday on Tuesday. And if we push below that, I'd go back to last week's low, down around $24. And that's actually more my target on the silver price. I think it's very likely we see a push down to about $24 on silver, which again, going from March $12 and change after the COVID drop to 29 plus, that's a pretty shallow correction, maybe a 35 or so % downward swing. And then same argument, right? We'll just see how some of these fundamental reasons, fundamental events taking place over the next couple months, how that speeds up or slows down silver's next step up.
Well, speaking about the fundamentals, I will say there's another event, Miles, that you didn't allude to, and that is the COVID 4.0 stimulus. We're still waiting to see what sort of agreement Congress and the White House make.
Are we on 4.0?
Yeah, it'd be 4.0.
4 times? I've only gotten 1 check. Where's my other 3 checks?
Different versions. Well, maybe you don't qualify.
I want
not
more
sure.
checks.
I can't speak for you, but other than that, the GDP, however, is looking positive. It's actually estimated to increase by $1 trillion more than what was expected when we were really in the throes of the COVID shutdown in June. And so that's good news, and it actually will impact that debt to GDP ratio a little bit. But the more they spend, the more it actually ups the ratio.
So we're looking at an increase in GDP this year, but how does that relate to the increase in spending that the government's doing?
Well, that's the problem, is that debt to GDP ratio that was as high as 139%, that's gone up from 59% just in the last 8 years. The problem that you have is that you're spending $3 trillion more in debt this year to try to generate a little bit of a turnaround and $1 trillion better forecast in GDP growth, which is still going to come up about $2 trillion short of what 2020's objective was to be. And so it's working, you could say, but it's like the drug addict analogy, right? The more that you need it, the more you have to give it.
Right.
Yeah, so you're saying the government's still broke no matter what, and they're going to print or default, right?
That's right. Print or die.
It really is. It's like that old 90s saying, like, skate or die, inflate or die.
I had
That's
that
right.
game on
Yeah.
Nintendo. So, inflate or die. Have a good week.
So that probably does it this week.
No, hold on one sec. I do want to leave on one thing that the King report pointed out. I think this is powerful. They said, so as we harped last week, it's time to get very defensive and wait for developments and news. And I think that we should have that as a takeaway this week as well.
Very well. Does that do it?
That does it.
That does it this week for Golden Rule Radio. Follow us on Twitter at ICA Gold. Like us on Facebook, McIlvany Financial. Our website, McIlvany.com. Give us a call, 800-525-9556. Thanks for listening. Have a great week.